Hello, hello, good morning. Welcome to another ES Futures trading stream. Today is Thursday, January 11th. We are just minutes away from CPI release. Okay. Let me open my charts, my bar charts. I want to open my bar charts. But we have yesterday this mixed hybrid day, kind of like yeah. It looked strong at the opening, but then the market just came back inside the previous day range, and there was a session one time frame early in the session, which is an advertisement of rotation. We did have rotation. The market went back and forth, but we have a rally that rally closed this distribution. We have this day with really high volume around in this area. It did close the distribution, and there was a rebalancing that happened after the market closed this distribution. By doing so, this market is really close to make a all-time high now. And remember, this day did not have excess, and also the all-time high was made in the overlay session. Okay, we talk about that as well. How does this kind of highs the market have a tendency to come back and check these highs out. It's rare that market leaves these kind of highs, and this especially the ones that made in the overnight. The reasoning for this, what happened afterward, this is just liquidation or rebalancing all this long inventory, the late laggards being liquidated there. These are the markets. This is the ES, Nasdaq, Russell. Russell looks like a long liquidation here. The Dow looks, man, this doesn't look good. The Nasdaq is, it has a ferocious rally here again. I mean, not a ferocious, it's having, look at this formation here. We have here a Nasdaq, this B shape here, another one here, and the ES, and the ES is in between these two ranges. And when the market looked below this low and was rejected, it puts this high. This high as an ultimate destination trade. The market pretty much almost has reached the opposite side of the range, and now what we have here, this is the monthly trading higher. The weekly is trading in range. We have a trading range here, and really close, really close to this high. Now there is this thing, right, with programs and strategies or whatever that call for buy, not sell, but buy, buy all-time highs. This is a breakout that we are about to have here. Okay, but what I'm looking, when I'm checking this, what can happen here and now, right? We have this range here. We may have, these are the scenarios, possibilities. It doesn't have to happen right away, but I'm aware of this thing, of this 4 minutes before the number. Now I want to see what happened now, okay? But the market may have this reaction okay, and stay up here. That will give us a gap here. Correction with this high. Market can keep going higher, or it can do that. Open here and trade low. This would be a look above and failure, and the other one is upside continuation here. What's going to happen? Which one is going to happen? I don't know what's going to happen. Nobody knows what's going to happen. That's what trading is. We don't know what's going to happen, right? It is within the realm of the possibilities that can happen, the look above and failure, or the breakout, you know. Something that I haven't seen in the last 2 years, almost, is this, right? I didn't see this thing happening. I'm gonna tell you what I didn't see. Is I haven't seen the market correcting this kind of highs and just falling apart after that. I have seen that only once. I don't remember. It was like I would say maybe 2 years ago, but I haven't seen that, and I guess it was around this time in the year 23, 22, maybe 2 years, maybe more, or 21. I don't remember now, but I haven't seen that reaction. I have that in mind as well, because what we have below is a market with weak structure, very weak structure. It doesn't happen. It doesn't have to happen that way, right? What I'm trying to say is, what I'm going to say is I am neutral. In front of this number, I am totally neutral. From yesterday, there was a really mechanical. I mean, it is more or less the same. Nothing has changed relative to last year, for example. Nothing has changed. Everything remains the same. Same kind of participants. And what I have noticed is going on is, at the end, and that's what I try, the ultimate goal is you end up trading the traders, basically, right? But it takes time to understand that, to see what the market is doing. Also, just look at this. Look at the Nasdaq, for example. Okay, before that, I need to open another chart. Oh, okay, before this number. I hope it allows me to open another chart before this opens. Come on. Oh yeah, I got it. And volume as well has been very low. Volume has been very low. All right, here you go. Woohoo! Oh boy, look at that reaction. My God. I mean, I am watching Nasdaq. Nasdaq moves faster. But Nasdaq did. I was watching Nasdaq also overnight. Let's put it here. It took all these shorts out, and then here we go. All right, we have a spike to the downside, but really low volume. It doesn't have anything here. There's nothing here. Look at this. It tries here, but it doesn't have anything. There's no. It can break hard. Can it? Maybe to this level. Can you see? Look at this. There's nothing here. I mean this mechanical level here. This is a big break, but it's still inside. It has just moved the market. I guess this could be an area that market is looking. You know, this area here in Nasdaq would be held back around this area. I have this area market here. Wow, that's a big break there. All right, has taken this one. Now, this area here. Mechanical buying here that happened yesterday. Very as close as possible to the previous day low. Also, that's a 4,800. Okay. Nasdaq has this area, and below that, you know, the keyboard the same thing happened in Nasdaq around this area here. Come on, man, don't tell me you came to, come on, look at this. Come on, look at this, look at this. It came exactly to that level. So this is, I think this is how market profiles can help, right? If you don't have this, you can have your chart as well. If you got a short here, I wouldn't trade this market. I don't trade this kind of events. But if you got a short here somehow, miracles, I got short. This could be a potential destination, right? Well, it came here. I just need a couple more ticks to come over here. No, get close to this. You hedge or I hedge or sell, but I don't do this. What I'm interested in see here is if the market can open inside this spike, or actually this will set a tone here. This is removing all these longs that we have yesterday. You know, remember at the closing, we have these weak longs coming exactly from this low. I don't know if this was held back. No, it wasn't held back. It wasn't held back. And this is just like, you know, prepare or could be a setup, not setup, like prime the market to, you know, for the taking, you know, of these highs here. This is the market removing these longs here, you know, from here. Now we have only this part here. Notice also, you know, if we got a volume profile, notice this is the you know, the chunk, the most of the volume is accumulated in this area here. You know, taking this area, that actually risks, you know, some serious selling here. It happens to be also the 4,800. This round number, round magic century number, you know, has power, has mythical powers, right? 4,800, now 4,900, 15,000, I mean 5,000 is even more powerful. All right. Now, do you got a short here? Can you imagine the shorts, the traders that have short this market here? Now, there is some volume that is starting to appear here. But this is insignificant, really. This is insignificant. There's nothing here. There's nothing. When I see like hundreds of thousands here, that can mean something, right? That can be the, you know, but this is not a sign for to go short or to go long. This is just to observe what's happening here. That would mean, you know, somebody that has the power to buy 1,000 contracts, or 2,000, or 9,000, or 10,000, and that particular participant, you know, letting me see those numbers. You know, they could come very well. Let's see how much do we have here. 300. They could be very well, like how much you have here, 1,000. You know, somebody buying 1,000 contracts here, but one at a time, right? You know, if I am a bigger trader, the last thing I want is somebody watching my trade. If somebody let me see his trade, oh boy, okay, why? Why somebody would let me see the trades, see his trade? This is a mechanical. This is a good trade down here. You know, this is what Jim calls an anchor trade. You just got your order sitting here and couple ticks, and that's it. A couple ticks of a stop loss, and that's it. All right. There is no other. This is Nasdaq, by the way. There is no other reference here other than Halbach. Can you see Halbach in your charts, for example? Okay. If I have a chart, most traders, most short-term traders trade or use this kind of charts. Not even this kind, they use candlesticks, you know. And this is 30 minutes, but most use this one, the 5-minute chart. Okay. Where is Halbach here? Do you have any idea where Halbach of previous day is? Halbach of the overnight is? You know? They don't know that. They just don't know. Most don't care. You know, you don't need to know much, you know, to know where Halbach is. But most traders, most small traders, retail or call it whatever you want to call it, don't know that. And believe it or not, it's an important reference. It's an important reference for, you know, to identify what kind of traders are in this market. You know, if there is somebody serious out there, you know, somebody that has power, that wanna place a buy order, you know, I'm going to buy, you know, 800 millions. I have allocated $800 million or whatever. I'm going to buy here. I'm going to buy at settle. I'm going to buy at the low. They don't care. They have no idea what those numbers are. They just start to buy. You know, let's place that order. You know, and what you want to do is what they do is, you know, when they start to place the order and when they finish the order, they want that number, that average number, to be as close as possible. The spread that they have between the first order and the last order to be as small as possible. Can you do that during the first question is, can you do that during the overnight? No, you can't do that. Can you do that during these numbers? No, you can't do that. But what happened here? If I have this reaction here, I could say maybe that that was a bad number, below the expectations. Let's check. I should have a CPI actually 0.3, forecast 0.3, previous 0.3 is unchanged. Nothing, right? Yeah, this is there's nothing there. Okay, let's see the other core inflation. Core year over year, previous consensus 3.8, actual 3.9. No, that's not good. Okay, look at this. Inflation rate month over month, 0.2 was the consensus. The forecast was 0.1, and what we had, the actual number is 0.3. It's higher than that. I don't know, but I found these results. Maybe that's okay. My year over year forecast 3.1, actual 3.4. Okay. not not what the expectation was. Okay, so this is not a good number. All right. Now I was something I was doing. I was listening to Tom Hogarth last night. And where is this? Let's see. I don't trade like him, but it's just interesting to hear because he was trading the DAX. There's a lot of context with what happened here. What happened here? What's happening? We're close to these all-time highs. With what was happening in the European markets, right? You just have a big rally here. And you just stops very close to the all-time highs, right? Very close, right? But what he has, his strategy. Let me see if I can bring you this. This is the discipline that the trader has. Whatever strategy you have, just stick to the rules of your strategy. Right? What he was doing, he was trading DAX and was trading some breakouts here towards the upside, and it just wasn't there. I guess he closed for a break even or side. I don't know. It wasn't, or yeah, it was a break even trade. He just retired. He didn't want to continue trading. He has another trades later. But what happened is, what happened after that you had this break here, this big break. The DAX also has a big break, and he used his strategy to be short here. Okay, but he just didn't want to continue. He didn't feel like the market was helping. Which means that my strategy is having high. It's not working at this moment. It's not worth. The environment, the context is not worth. Look what's happened with volume. The higher the market goes, the lower the volume. For the past 4 days, volume has been in the lower side. What do we have in the last 4 days? 1, 2, 3, 4. Higher, higher, and higher. Market is going higher, higher, higher. It still has like 15 minutes. Oh, I was going to see if is he live now? I think he is. How do I listen? I was listening to him in my computer. Last night. Oh, I guess has. No, it's over. Yeah, he has. There's a lot of psychology here. Okay. Oh, what events do we have today? Let me check. We know we have CPI. Something, oh no, this is not. Something that is not. No, there's a lot of traders now in the market. Oh, okay, I want to do a lot of money. They are selling short, buying long here. In this environment, it's very hard. It's very hard to do something here. what is this? Bill action here. 3-year not action. The bill action. 8-week, Thomas. 30 years. Look at this here. I have started to pay attention to these actions from the beginning of the year. Now these things here are having some. These are actually having an impact. If I am trading today, I'm doing something, I will pay special attention if I am, if I have a position around 1 p.m. because this thing has been moving the markets quite fast. It is having some spikes in any direction the past weeks. Be careful around this time here. It also happened. I guess it was this 10-year not action. This is 1 p.m. Be careful, mommy. This is history now. No, just be aware. Be aware of that. Okay? Don't forget that. It's everything about context as well. If I have a ranging market with a weak high, boy, there could be some odds there that something can happen, right? Now my focus before the opening is where this market is going to open relative to the spike. Okay? What I mean with that, there are several things going on here. Let me show you that there's still one period and a half. I had my dog, the wife's dog here that's doing some noises. I apologize. Hey, come on. Easy. Okay. Let me give her some treats. Take it. There you go. There you go. All right. This is the spike here. I got a spike here to the downside. I would say the spike is below this. I consider the spike below this low here. What do I have here? The low, the spike here. It's kind of questionable being bought from this area. It just came back inside this range. Okay, but was rejected. There was a rejection so far. Right? I know that there is this area here that this potential for firecracker effect here, meaning this is the thing, right? Volume here. I got high volume here in this area, high volume area here. For any potential downside movement, this can be the fuel. This area here. All right. What do I have here? I have one low, another low. Hitting these lows, the market can have, a really fast spike to the downside. A burst, there can be a burst, aiming to take these stops. It can be really fast, something like, and then come back, right? Come back like that. If the market comes back later, meaning during the same period or maybe the next, the first action is taking these stops down. Comes back, if there is something serious here, the market will work its way to the downside through this level here. Also, what do you have here? 4,800. There's going to be a lot of back and forth here. Which is beliefs, right? Traders believing this is it. This is the level. Okay, this is support. Another traders, another group of traders will believe, okay, that's resistance, you know, or whatever. We go through that, and you know, it's going to hell. The market is going to hell. All traders believe this is the base, you know. Next thing, taking the alta, this high. Which one is going to prevail? I don't know. Is this going to happen? I don't know. You know, but this is just one A scenario. The other A scenario is I have this spike here, right? I have this spike here, and the market opens up here. Opens up here. You can open here, which will be inside previous day, or you can open up here, which will give us a gap. It can give us a gap here. The past gaps, we have 7 gaps in the lower side. The market has left behind. All the gaps, every single time the market has gapped after that, has been closed. What can happen? We have a gap here now. The all-time high has no excess in the regular trading hours, so the all-time high was made in the overnight session. You know, if there is some selling here, I don't think I don't think that they are going to leave these things up there. And also this area in particular, this area here, you know, this is the area right where the market is right now. This area here, you know, is for me, this is kind of like this level that the market will. This can be support or resistance. You know, I don't know. If you check your market, your volume profile, if you don't have market profile, most likely, yeah, you can have volume profile. You will see this accumulation here. Now you have two areas. The one at the bottom is the most relevant one because it has more volume. Just look at that. I cannot see the numbers like 12, 18 or something like that. This doesn't have that much, but it is accumulation here. And this area coincides with these big blocks here that I have here. You know, you don't have that. Okay, you can use saddle. You know where saddle is. Saddle is a really important number. You know, many traders don't know what saddle is. Now you can use this website. Hey, wait, I'm streaming here. Wait for me. 5 minutes, okay? You can use the website, the CME website, to find out what saddle is. This is a saddle for the ES, and here you can also find the saddle for Nasdaq. Nasdaq here. This is important number. Also last. You know, the last should be the last trade of the day, but this is the official number. Okay, I use Thinkorswim, others use Tradeovate, Ninja, or whatever. No, that doesn't matter what platform you use. Okay? Your platform likely will not be the same, will not have the same last than the CME. That's the official number. And also saddle. Saddle is the price at which all the contracts are settled. And that's why I have this number here. Right? There is a lot of talk. The market is negative. There are markets open to the lower side when the market opens below saddle. No, market opening here. Is this negative? It's still inside previous day range. It's still inside previous range. It's still trending to the upside. But everybody will be talking about this is negative, now it's time to sell or whatever. Right? Because your numbers will look red. Your numbers will be red, will not be green. And that's part of trading. The psychology of trading as well. As soon as the market takes settle, a lot of buying comes to the market, may come to the market, because now everything is green. Why? Why do I buy? Just because it has seller has been taken? You know, that's how it is. That's how traders trade. I got to be aware of that thing as well. I think Jim has a webinar coming soon. Oh yes, at 9 a.m. Yeah, like about 3 minutes. I will be attending that webinar. You can find, again, I have no association with him. He was my mentor. But this, I love this one, the last one. There's really good information on this webinars. He's just announcing his courses. Yeah, he has an intention coming for February, I believe. You can use this. It's free. That kind of information is my favorite information, right? Free. I remember one friend once I don't know. I don't remember what I gave to him, but he said, I guess I gave him food, something like that. And he said, "Oh, this is my favorite. Thank you." I feel good, right? Thinking, "Oh, okay. Well, I guess what he likes." "Oh, you like this? Yeah, this is my favorite." What? Because it's free. That's what he said. I still remember. Boy, that was funny. That was funny, really funny for me at the time. I had, I have a good laugh when but I think he was right. All right. If you have any questions, please let me know. I think I may come back after Jim's webinar. But I will be attending Jim's webinar. My focus is the spike here. Where the market opens relative to this spike. There's a lot of mechanical trading that happened yesterday. This can be rebalanced. If the market takes this low, that's change. Trading is about change. We have a lot of weakness here below yesterday's. Before yesterday, we have this buy coming from while back, this buy coming from while back as well. That has not been corrected. Rather, that has been weakened even more. Okay, because more has been adding right on top of that. Look at where this overnight low is sitting right there. Okay, but at the same time, we have this. It's just traders can feel this. Traders can smell. Yeah, I can almost taste it. Right. The all-time high is so close, right? So close. The market cannot sell from here. That's what they will think.
The webinar will begin shortly. Please remain on the line.
Oh boy. Oh boy. I didn't realize I wasn't using my microphone. I apologize for the quality of the sound. Sorry for bothering you. I want to offer promotion for the channel. Viewers, followers, views. No, thank you. Somebody's trying to sell followers here. I'm not interested in that. I do this for, to be accountable. It's also when you teach, it's a good way to learn as well. All right. The webinar is about to start. As I say, I wish you guys Good luck today. Stay safe. Okay. See you. This dog want to go outside as well. All right. See you guys. Bye bye.